So yesterday we spoke about, and for the new guys, you can watch all the recorded videos, right? Yesterday we spoke about external risk liquidity. Okay, external liquidity or range. Okay, external range liquidity. Yeah. So when we speak about external risk liquidity, what are we going to be focusing on? We are going to be focusing on the previous session high, previous session low, like this. Previous session low, previous day high, previous day low, previous week high, previous week low, previous month high, and previous month low. So obviously the weekly high and weekly low, monthly high, monthly low, you're only going to be focusing on those if you don't see price action to the left. So over here we can't see anything to the left, so we refer to higher time frame liquidity pools, not the lower time frame ones. Okay. Where's my thing? Okay, here you go. Right. So let's look at an example now that I have this over here. I'll show you an example about what we were speaking about yesterday and how it came into fruition, right? So look, previous week high, previous week low. If we focus on Bitcoin, the 1 hour chart, okay, you can see I denoted the previous week low. I'm sure it's not that, it's this, okay? So previous week low. All right. Let me double confirm because that does not look right. There you go. Okay, that one. That's the previous week low, okay? Look at, it's pretty much the same thing, right? Look at that, which I'm pretty sure it's this one, but let's keep it like that. So look at this previous week low, price drops. Okay, and I said yesterday, I'm not sure if I said it on the video or whether I said it on the on the Discord chat. When price goes down, obviously we are supposed to be looking for buying opportunities. Okay. Now, where's the buying opportunity? It's supposed to be here. It's supposed to be here. It's supposed to be here, right? So it's supposed to be either here, here, or here. And you can see that we failed. So we came down, we closed aggressively below, created our own little range. We had a stop hunt here and we dropped, right? The moment that happens, okay, the moment this happens, especially after you take out a low or a high, when it creates a new range and works within that, especially showing either SMG or displacement, you forget about everything up over here for the time being. Okay, for the time being, you forget about everything up over here and you focus on this itself, only this. Right? That's the only thing you focus on. High breakdown. What's this? Bearish interbank dealing rate. So what's the structural type? Bearish. Okay. So we understand that the buy side rate first, sell side rate second leads to a bearish dealing range. Meaning anything inside of premium is a good selling opportunity. Okay. Anything inside of premium is a good selling opportunity. So now if price is dropping below the weekly low, previous week's low rather, aggressively closes down below, forms its own range, and then continuously sells off. What does that say? It says that, okay, you know what? We are no longer going to be looking for, price taking out a low, then we can look for inducement to go higher. Instead, we are going to be looking for, okay, price is making a new range. That's the range I'm going to be working within, and I'm going to sell into that range. Okay, I'm going to be selling into that range, and I'm going to follow a structure. And of course, that structure is bearish order flow as well. Okay, bearish order flow as well. Now, this as opposed to, all right, this is as opposed to something like this. Go back to the lower time frame, 15 minutes. Let's segregate the days. So 6 here. There. Okay, so looking at this day, and today. So yesterday and day before, right? Now yesterday when we were talking with prices over here, and I told you the mistake I made in identifying the accumulation zone. I did not see this wick over here, because then this makes this the manipulated area. Okay. Look at this. Here, it's the time is 7 o'clock, right? Here it's 9 o'clock, 9:30, 9:30. So that's, yes, that's the previous days for this. If we were here, this is the previous day's New York low. Okay, that's the previous day's New York low. So it's a previous session low. This is the previous day New York high, I would say. Yeah, New York high. So we are now working inside of this high to this low. This high to this low. And you can see price consolidated, forming what? Forming a PM trend high, PM trend low. So PM trend low, PM trend high, which is still session based, right? Which is still session based. What about this here? 11:15, 10, 11:15, PM trend high, PM trend low. There are still liquidity pools, right? Which occurred or which were printed by price when the algorithm was supposed to be moving price at that particular time. Okay, maybe not for Bitcoin, but for other asset classes. So obviously, when money moves, money is moving in all asset classes at the same time, right? This is an important low. This is an important high. Now, yesterday, the reason why I said that this was not an important low was because of my failure to see this. So I was completely wrong in that regard. So when the moment I saw this and the moment I saw this, I was like, okay. It is an important low in this context, right? This in and of itself is not important because if the accumulation zone was here, price is here, right? And if price sells off, then you obviously you can see it's not important. But the fact that the accumulation zone is up here and this led to an inducement to go higher meant that, okay, you know what, Sean, you fucked up. That is important, right? So we have a low taken out here. We have a high taken out over here. Now stay with me, okay? This is an important high, PM trend high. We take it out. That's a buy side rate. So yesterday during the stream, what did we have? We had a sell side rate. So what was created as a result? A bearish dealing range. Okay, a bearish dealing range under bearish context. So that was a perfect sell. Okay, so the moment I saw that, I was like, all right, I made a mistake. I immediately sold it over here, and nicely down we went. Okay, and down we went. And that's pretty much it. That's pretty much all I have to say about the external range part. All right. Going and looking at something like, let's go to euro. Okay, remember when we had the live session, I was talking to you guys about, you know what, it's going to take this one out, it's going to retrace. It's going to take this one, it's going to retrace, right? Here's why I said that. Looking, so okay, I still have the days over here. So over here, if you look at this low, it's at 9:45. Right, so now let's look at the start of New York. Start of New York is here, 9:45. So this is the New York low. Previous day's New York low. Okay, and see, we take that out and we retrace. But now what are we retracing towards? We are retracing towards a point of inefficiency in price action that allows us to continue in the direction of order flow. I'm going to repeat that. It's going to allow us to Bitcoin stopped out. Okay. So it's going to allow us to rebalance an inefficiency, all right, in premium in this case, to allow us the opportunity to get in short to ride the current order flow. Okay. So there's one opportunity to buy, to sell. What's this? 345. Anything else before that? No. So this is the London low. So this is the London low. Retracement. Order block imbalance inside of this sell-off. What's the next remaining low? This one, previous day's low. Price takes it out. And see, takes it out. Do we go raging down? No, we don't go raging down, right? Do we have an imbalance over here? Let's see. This one looks nice. So around 1.1324. 1.1324 is here. Small little imbalance over here, right? If we don't go higher from there, then what's going to happen next? This previous day's low, right over here, is going to be used as natural resistance. So price is going to drop and continue low. So that's how price drops low, right? The price doesn't always go down, boom, boom. Now, if the context isn't right, so now what's the context for this? Price takes our previous day's low and continues to go down. Then what happens? What are we going to be looking for? We're going to be looking for independent ranges to form down here so we can sell into that. Okay, we're going to be looking at independent ranges to form down there so we can sell into that. Again, now there are ways or there are certain combinations of in price that allows us to get in some large moves, maybe smaller moves, maybe super large moves that target monthly highs, monthly lows, yearly highs, and yearly lows. Okay. Let me refer to my notes because I always refer to it because I can't memorize that shit. So here you go. Okay. So I'm not going to show it to you. I'm just going to, because it's recorded. So I'm going to say it out loud. All right. So now when we are bullish, okay. Sorry. When we are bullish, we would normally, take out a previous session low and go for the previous day's high. Now, again, I'm encapsulating it to simple trades. Okay, so whether it goes to the previous day's high or previous week's high, it depends on the imbalances, inefficient. The same thing, imbalances, low resistance, liquidity pools, and all that business above price. Okay, so I'm encapsulating this to one simple simple framework, and the framework is from a session low to a previous day's high. All right, so from a session low to a previous day's high. Okay. So if price takes out a previous session low and starts to show some immediate reaction and starts to go higher, right? That is an indication that okay, you know what? We are gonna the daily candle is gonna be protected. So meaning over here, let's look at this. Let's look at this one. Okay. See, we open, we go down. In this case, yes, we take our previous day's low. But now here's the thing. If you take out a previous day's low and then we immediately start trading higher, what's our target going to be? Is it going to be a previous day's high? No. If it's going to be previous day's high, then it's just going to be bullish up until this and it should drop, right? But no. If it's going to do that previous day's low and he immediately starts trading higher, you're going to be finding excuses, not excuses, you're going to be finding reasons to buy and hold until a previous week's high. Okay, so if I show you the weekly chart, so let me just remind myself where that was. Okay, that was over here. So there you go. So there's your buy. You're going to be targeting the weekly high. Where's the next weekly high? Not this one. Up here. Okay, so that's your target. So what? 43,551. 43,551 is where? 43,551 here. That's the previous week's high. You take it out. Now, after taking it out, are we going to expect price to drop immediately after? No, because we are looking at the current context. Okay, we took the high out, but is there anything else that we can take? Is there any imbalance over here? No. Where's the next thing? And where's the next set of imbalances here? Okay, that's the imbalance. So we filled it up, try to fill it up, drop, completely filled it up, and then we started dropping again. Again, now this is another example of, now we took out a weekly high. Okay, we took out a weekly high. Did we keep on raging higher? No, we did not. We started immediately trading down. Trading lower. That's the sell. Right now we sold from what? Weekly chart. The daily imbalance based on weekly high being rated, right? So we sold from there. What are we going to try looking for? I'm going to try looking to aim for weekly imbalances, a monthly low, something like that. Right. So now if Bitcoin was to start plummeting today, now without giving us that retracement to get a nice sell, if it starts to plummet today, or now rather, where would you most likely keep your profit target at? Okay. Go back to the 4 hour, no, not 4 hours, monthly. Okay, again monthly. Take out all these lines so that we can look at things properly. See, okay. This monthly candle we opened. Is that the opening? Yes, that is. We opened, we went up, fill this up, and now we are dropping. Now we are near the monthly opening price. Here, this is the monthly opening price. We are near the monthly opening price. What's the point? Wow. Is there literally any reason to react over here? No. What about this small part? Let's see. This small part stems from this low to this body, right? So we want to see if there's any imbalance over here on the lower time frame. If there is no imbalance, given that we traded through it, now see we are seemingly finding some form of support there, right? Because this closed above it. So now if this month's candle closes below this imbalance over here, then this fellow is going to continue bleeding all the way down. Okay. But anyways, I'm digressing. This is the candle. If you're going to take, if you are going to take a sell inside of this month, where are you going to be targeting? You're going to be targeting the previous month's low. Where's the previous month's low? Here. Then, how do I know it's going to stop there? I don't. What I can say is, if I were to make an educated guess, what I would say is, or an educated opinion from my from what I have to say is, this over here, relatively equal lows on the lower time frame. This over here, volume imbalance, third fair value gap. We use that up. So are we going to use it again? Highly unlikely. Where's next target then? Here. What does that say for Bitcoin? Bitcoin all the way down to at least 28,050. Okay, Bitcoin will at least drop to 28,050 based on this, right? You all understand? How much am I at the work charge? Okay. You're getting over. Understand the bus stand? Finally, you use it properly. No, not you, Bilal. You are the one. All right, so that's the way to go about it. Okay. Now, this will take a long ass time. I'm thinking maybe in the next 2 months, maybe, right? Or maybe now, like today, maybe next week we can start the massive ass plummet down. Well, let's see. At least we want to see this low get taken out. Once this low gets taken out, you want to see it continue low. Okay. Weekly chart. What can we see? Here, imbalance, filled up. Okay, we went higher. This is not the reaction we want to see. We want to see more moves higher. But see what's happening? It's coming down. It's failing to go higher. It's coming down. What's that? Another bearish signature. Down. What's this? Relative equal lows. Down. What's this? Lack of an imbalance. Down. What's this? Imbalance. Okay, fine. That's the next drop. This is an imbalance, not a fair value gap. Where's a fair value gap? Here. What will price seek? Price will seek to fill an imbalance, but price is drawn to a fair value gap. This is the fair value gap. It has to be anchored to opposing order flow. All right. So this is opposing order flow, down close, up close, up close. So this is where the state changed from down to up, from bearish to bullish. Okay. So this is your fair value gap, right? Because of time frame now. Let's get to the point of today's session. All right. So today's session now, you can see that the long was hit stop loss. If it did hit stop loss like that, what am I going to do? I am now looking to sell. Okay, I am now looking to sell. Look at this displacement breaking market structure here. High, we drop. Okay, if I were to segregate this into a daily component, so here based on the daily cycle, not the cycle, daily chart, or the daily from the time in which CLS starts. Now, obviously, CLS does not govern this one. It does not govern Bitcoin, but it's a good benchmark to use. This is a supposed start of the day, 6 o'clock. Okay, you look at the opening price here. We found support. We resisted the daily open, and we drop. What does that mean? It means a bearish day. Fine, we got that. What's the next step? Now listen. This is the move that we want to see, right? Over here. So that's okay. So I will say, okay, you know what? If you sell over here, don't expect it to come all the way back there. That's why when I was looking for a buy, I was looking for a buy all the way up here only. Because from here I want to see the sell off, not from up there. Because this has happened. The template for open, expand away, return to the open and drop, that happened over here already. So there's no reason to do that again. If it does do that again, then what's going to happen? Story is going to start changing. It's going to start changing its storyline. Okay. Why do I want to see over here then? Look, where's the 12 o'clock open? 12 o'clock open is over here. That's 12 o'clock open. Up, down. We never really retraced. We want to see that retracement. The attempt to get back near the daily open, the 2-day open, to go lower. We did not get that. That's what I want to see. Okay, that's after it does that only, I'm going to be looking for. I'm going to be looking to sell Bitcoin until all the way down until the relative equal low on the monthly chart. Okay, so now that I segregated the time component, this is 6 o'clock. Asia is there at 12 here. That's where the Asia ends. Okay, that's the Asian low, that's the Asian high. Not this over here. That's pre-Asia. So Asia technically starts at 7 o'clock. Okay, 7 o'clock. So 7 o'clock is over here, but I don't see that as a high because it's not a swing high. So I'm going to be using this one. Price drops. Where is the supposed weekend London high? London high is, oh, you can see this here, high, small, high, and it drops, right? That's your London high. Okay. Now this is your London high. Where's your London low? Let's see. London low is somewhere over here. So 5 o'clock, 5:45 is over here. That's your London low. All right, we took the London low out. Okay, we took the London low out. Now, if we took the London low out, can we expect a buy? Question mark, I'm asking everyone. Now that we took our London low, suppose that weekend London low, can we expect a buy from Bitcoin? Yeah, where Funio? Tell me. So confident day. Tell me from. I want your signal, bro. If it is, I'll go full margin on this. I'll risk all 700. And so if we see this is your, if we get the high, if we do get a bullish move, take this high out, what's that inducement, right? Inducement, head into either this gap over here. I would prefer this one. Maybe this one, and then sell off. I would prefer this one. Either way, if there's any reaction here, I will take it. Because why? You can see this, right? We formed the gap over here. Sorry, over here. So this one. And then we did not necessarily, make another candle over here and then wick into that, right? So that's what we want to see. Over here, we formed an inside candle, and that is the one that formed the gap, right? So that's not So that's not something. Yeah, there's a difference between Pemberton and Coinbase. Yeah. So all I know is this is the area I want to be looking at because I looked at it between the two. What was I saying? Yeah. So I want to see this imbalance over here, trying to be filled up, and then only do something. Coinbase, you take out the low. Yeah, but sometimes it screws everything up for me when it doesn't. Even if Coinbase doesn't take out the low, okay, that's like a good thing because then I know that this low is protected here. Low is protected, and so this is the inducement. But I'm going to be careful. I'll wait and see. I need to see a nice move up from there. I want to see bullish SMT. We have low, right? Low. Now this entire wick business could be due to a broker. So what I'm going to do now is you said that Bitcoin didn't take the low, right? Obviously over here, Bitcoin did not take the low. So what I'll do now is I'm going to be looking at Ethereum at Coinbase. What happened to Ethereum? Did Ethereum take out a low? No. Low, high, low, low, high, low. So there's nothing, right? Now let's look at this. Look at the highs. High, 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 high. Everything is symmetric. Everything is symmetric over here, right? There is no bullish S&P from here. There is no bearish S&P from here. So when that happens, what are we going to do? Someone tell me. If there is no bullish or bearish S&P, what are we going to do? Tell me, tell me, tell me. We learned this recently. We are going to structure. Very good. All right. So structure, right? So obviously, if you refer back to Coinbase, this was what we took out this low. We took out this low. So this low did not really take out anything. What are we looking at? We are looking at the 50, right? The 50. So you see, structure is displacing to the downside. We displaced over here, displaced over here, now displacing over here. So it's all good. So we are finding an imbalance. Over here, can we find an imbalance? No. Can we find an imbalance over here? Can. Yeah. Okay. This is the imbalance. This is the fair value gap. Imbalance, fair value gap. Yeah. So that's like what? 38, 402, 403. 38, 402, 403. Okay, same thing over here. So what we're going to do? There's no bullish S&P, there's no bearish S&P. We follow structure. What is structure suggesting? For now, it's suggesting bearishness, unless it's this starts to magically displace up, and up, and from up and up and up and up and up from here. Okay. So for now, we are focusing on this. All right. Now, anyways, moving back to the topic in hand. Topic at hand. Euro. 15 minutes. Now I showed you one day, right? Now let's go to another day. All right, let's go to another day and let's look at this random. Okay, so this I don't know why I put that there, but look at the daily chart. Okay, so 14th February, 15th February. 14th February and 15th. So 14th is over here. So we start off from here, end it over here. Yeah. All right, so that's one day. Okay. Now let's play the next day slowly. All right. So what can we see? We can see that this is the previous day's high. This is the previous day's low. Okay. Now today we'll focus on the internal portion of things, right? Now what we're going to do is we're going to find the previous session highs and lows. Let's see. So that's the Asian high. So that's previous day's high. This is the London. London technically starts at 1. We can't use this one. So we have to do the next best thing, which is this here. This is the previous London high, right? So previous London high. Then what about the London low? Let's see. London low is over just as London finished. So that's not a swing low. This is a swing low. Look at this. That's the previous London low. Now look what happened next. Previous London low. On this day itself, on this particular day itself, we took out, see here, we took out the previous London low or the previous session low and we retraced. So why? It's time sensitive. Took it out, retraced. Why are we retracing? To fill in the imbalance. That's a sell. Okay, but we are not focusing on that. Next up, New York. New York high here. Previous New York high is over here. Previous New York low is where? Is it here? That's a PM trend low. Where's New York low? New York low is over here. All right, so previous NY low. Okie dokie. What happened? We took it out. See, over here we took it out. We went higher. That's good. That's a buy. All right, so that's a buy. Now look, okay. We took this out, and then we started to show, medium signs of displacement. Okay, what are we targeting? Right, that's the question. What are we targeting? We should be targeting what? Highs. Right? We should be targeting highs. So let's see. If it targets highs over this, we're going to target the previous day's low. So I'm going to play it and just look at the sensitivity. Okay. Okay. Previous New York high taken out. Previous New York high has been taken out. See, does it rage up? No. It consolidates. Right? Consolidates. You need to see this taken out. This low has to be taken out for you to consider long-term sells. Okay. This low needs to be taken out for you to be this thing long-term sells. Comes down, displaces. What time is it? 9:45. On this day, this is the previous day's low. This is the previous day's high. Why did I tell you earlier? Well, if a previous session's low has been taken out at some point, the next target is a previous day's high. Okay, now see where context matters. If you were to use structure only, this is long-term sell. This is a trap. You sell over here, maybe scalp, something like that. This is a trap. Previous session low taken out here. We see the change. See, this is where the change shows itself. There. Here is the buy. Here is your target. Or maybe this one, or maybe this one, or maybe this one. So either way, if this is your target, it hits take profit. This is your target, it hits take profit. If this is your target, we have to wait and see. Okay, so play it forward. You take it out, not so much. A bit more, a bit more. No, right? It didn't take it out. So by now, if you bought over here, majority would be partial over here because you're saying, okay, you know why it's not going according to the way I want to see. It's not going according to the way I want to see price move. Suppose to take the previous day's high out, it's not taking that. So I'm going to take out 80-90% of my position. Move my stops to break even. Nice. Takes it out. Session low taken out. Next step is previous day's high on the high time. Okay, that's one. Then we just look at this, so let's look at something else. Random day. Let's see what we can do with this. I guess this has already been played enough, so we'll go to the next day. I guess this should be fine. Yeah, that's fine. 6 o'clock is here, unless I missed something. No, right? Yes, I did. Okay. All right, so here's 6 o'clock. There. Okay. next thing. What can we see? Previous day's high is here. High. Then previous day's low is over here, which is in line with the London low. So we don't have to look at the London low. Previous day low. Now we're looking at previous session highs and lows. What's this? Is this Asia? Yes, it is. Asian high. So I'll just call it Asian high. Asian low is where? Is it here? No. Is it? I think it's a yes. Asian low is here. Okay, Asian low. What else can we see? New York high, New York low. New York high is this one. New York low is this one. Low. NY high is up here. Then what's next? PM trend and AM trend. AM trend high is in line with this. No, it's not. It's this one. Okay, so AM trend high. AM trend low is I guess that's it. PM trend is over here, so you guys can see the reaction with that. All right, so now we look at the next day. Okay, here, did we take it out? Yes, we did. So this is useless. This is useful, useful, useless, useless, useful, useful. Okay, so keep that in mind. I'll keep a circle over here to say it's useless. So, play it forward. Now look at what happened. Okay, we took our previous session low here. Previous session low. Changing state, we want to see some form of a high being taken off. If it fails, then it's flipping the script, right? Right. Session low taken out. Change state. There's a buy. There's a target. That's all. So that's the framework for the buy. All right. Now we took out a previous day's high. We took out the AM trend high, previous session high. What are we looking at next? Right. Now we want to see if price is going to close bullish on the daily and just give us consecutive bullish candles to the upside. Obviously to the upside. You want to see price start going higher and create more ranges here instead of coming back down here. No. So previous day's high was kind of sensitive. Price gain, price drops, price breaks, right? Now what do we want to see? We want to see price attempt to go lower. But first we need to partition the days. Okay, so here's the day. On this day, Asian high was here. No. Kind of confusing over here. Okay, here. Asian high here. Asian low is where? Asian low is here. Yeah. So Asian low is there, right? What about London low, London high? London low is over here. Is it? Yeah. This is London low. London high is here. New York high is where? New York high is. We've got to play it forward to see for the next day. So let's play it forward. And stop. Okay. Look at what happened. Okay, so we are finding the New York high, New York low. So New York high is obviously it's over here. So we need to find. Okay. Is it this one? No, it's this one. New York high taken out. New York low is over here. Okay. Now consider this. What I just said. Okay. You don't need this anymore. This is now your previous day's high. And this is your Asian low is your previous day's low. Okay, forget about that. It's this one. Why do I use 6 p.m. as the daily cutoff? I use 6 p.m. as daily cutoff because that is when CLS starts. That's right. Okay, so these are the important lows and highs that we need to be looking at. Now, obviously, you can see that as we took out this previous day's high, which is over here, we went up, boom, 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 and we came down, right? Now, if you took out a previous day's high, right? What's next? We should be taking out some form of an important low. We should be taking out some form of an important low. This low over here is not that important. Why? Because look at what happened. It happened in premium, right? We want to see discount lows being taken out so that we are sure that okay, what's going to go down. Okay, Asian low is intact. This here, this over here is what you want to see. We took out previous day's high, we got some reaction, and look at the time in which we got the reaction. 5:30, no, 5:36. 6. until over here, this candle, this price action over here is useless to us. Okay, unless this price action gave us a displacement, this price action is useless. It doesn't give us any information whatsoever. This we broke market structure with speed. Okay, we broke market structure with speed. Now we are thinking about price using these ranges over here or creating a range in order to try and go higher the next day. Okay, you want to see price attempt do that. Unless of course there's something over here and it starts reacting. Okay. What happened? Previous session, previous day high taken out, a low taken out here, price goes higher. What happened over here? Previous low taken out, previous session low taken out, change of state, price runs for the highs. Now think of these as sequences. Okay. Previous session low taken out, change of state, price runs for the highs. Previous day high taken out, previous session low taken out, price changes state, price goes higher. Higher. Okay. Let's look at the next day. Previous day's high, previous New York high. Let's put that previous high. This is not required. Boom, boom. This is previous NY low. All right. As of now, this is the range that we are focusing on. Okay, this is the range that we are actively focusing on at the moment. Let's play it forward. At this time, we have nothing. Okay, we have nothing, no context whatsoever. We need to see one of these external highs and those get taken out. Now, obviously, take out this high and then drop, or form the Asian high and low, rate the Asian high and then drop, something like that. Okay. Took the high out, previous day's high taken out, price is raging above, right? So if it's raging above, we are going to expect continuation unless it starts changing state to the downside. Goes up. One more time. Here's the sell, right? Here's the sell. Took out the previous day's high. We did not touch anything else in the previous day's range. Okay. Took out previous day's high. We did not touch anything else in the previous day's range. Then what happens? We go to our cutoff point here. 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 Look at all the session lows. London low taken out. London low, this is also London low kind of taken out. Yeah, taken out. Asian low remaining. Asian high obviously taken out. So what's remaining over here? Just the previous day's high, previous day's low, New York low, which is over here. New York low, and New York high, which is over here. What happens the next day? Focus on the internal candles, right? So this one and this one. We took it out. What happens next? Are we changing state? Kind of, but it's not enough in terms of the volume. It's not enough in terms of the volume. Previous session high taken out, previous day's high just taken out. What happens next? Price rages on, right? You can see the pattern over here where once this is has been taken out, once price runs away, it's working in its little ranges just to go higher, making new daily highs. Okay, takes out, runs up, returns into the whatever range is over here and continues higher, right? At this point over here, when you can't see anything to the left, right? It's obviously far away, right? But what are you going to do? You're going to focus on weekly highs and weekly lows. Okay, you're going to be focusing on weekly highs and weekly lows. Here's that. See, failure starts to try, it's attempting to run above. What happens next? Supposed to target something, right? The previous week's high. Another week's high. What's this? Do we have an imbalance here? No. Where's the next imbalance? Here. So fill this up. So this is the remainder, right? Like that. Small fill up. Go to the daily. Now we were looking at price from all the way down here, right? Here it is. We ran up here. See, minimal return back to the previous range. Runs up. Goes up. Minimal return back to the previous range. Runs up. Now see, runs up here. Takes out this high, which is a daily high. I think it's a weekly high as well. Yeah, it's a weekly high. Yeah, it's a weekly high also. Weekly high taken out, and see how it comes back into this range and then continues going higher. If you want to see how it looks like, come back. 15-minute chart. See this, right? How could we, or how could you have gotten this move? We are in the understanding that from here itself, price shifted from bearish to bullish. Why? We took out a number one, bullish interbank dealing range. Number two, we took out a previous session low and we ran away, taking on a previous day's high. Then we ran away from here. So from this itself, you know that the next following few days are going to be bullish and we are going to be targeting weekly highs. Okay. Now I personally don't trade like this because I don't like holding my positions. But if you do trade like this, you're going to have a very good win rate. Okay, but that's of course if your psychology can support you. So what's the day we're looking at? This one. Okay, what we just did. Okay, 6 o'clock. 6 o'clock is over here. 6 o'clock is over. I think yeah, it's over here. Yeah. All right. Let's see what's up. Daily high taken out. Previous day's high taken out. Is it? Yeah. Previous day's high taken out. Good. We start running above. This action over here is enough to suggest that, you know what, when it retraces, it's going to go higher. Okay, that's enough. Because if you were to go lower, then from here itself, we should be starting to displace lower. That did not happen, right? There's a clear drawn liquidity, which is seen on the higher time frame, as ICT teaches. So looking at the data points over here, we have Asia low taken out, Asia high taken out. So that's nothing for us to look at. This is the London low. This is the London high, which is over here. All right. Then the daily high is over here. Previous day's low is over here. New York low is what? Here. New York high is up over here, so it's the daily high. All right. This has been taken out, right? London high has been taken out. Fine. Is there a sell? Okay, let's see. High, high, high. See this down move? That's displacement. That's what we want to see when price breaks market structure, right? Or we want to see SMT. That's a good sell. Now the question is, where are we trying to sell it off to? Right? That's the question. Where are we trying to sell it off to? Okay. If you sell over here, let's say over here. Where to take profit? To take profit is obviously it has to be imbalance or a low, right? Looking at this here, look at these consecutive down close candles, right? Here. There is no fair value gap. Now, imbalances are one thing, fair value gaps are another. Okay. This is a fair, this entire thing here, fair value gap. From these consecutive down close candles, it's a fair value gap. You can see that this candle closes it in. This candle closes it in. It's not a fair value gap. It is only a price imbalance, which is going to get what? Going to get filled. So what happens? You fill it in, right? But price is looking for a fair value gap. Where's the next fair value gap? Is it over here? Here is the start. Here is the end. What happens? It's filled up over here. It's not a fair value gap. Therefore, what is it? It's an imbalance, remainder of an imbalance. What's going to happen? Price is going to fill it up. There you go. Okay. but we are looking for a fair value gap. Where's a fair value gap, man? The fair value gap is it over here? No, right? See this one? Filled up, right? What about this one? Here with this. Why now? Why am I flipping the script? Why am I saying that? Because now look at this, okay? Consecutive dark close candles. Here is the highest high of this one. That highest high is met with what? This. That's completely balanced. What about this here? See here, this one, this one, this one, this one, this one to this one. This, whatever is supposed to have existed over here has been balanced. What's the remainder? What's the remainder of price that's going to be filled up later on? Because if this is the starting of the fair value gap between this and this one, it's already filled up. So what's the next level of a fair value gap that's inside of this imbalance? Okay, what's the next level of fair value gap that's inside of this imbalance? It's going to be between this one to the wick that came into this one. So this is a fair value gap, right, between this one and this one, this order block high to this bullish candles low. Okay, that is your fair value gap. So that's how you should be thinking. Okay, so here and let's see if that's where price reacted from. Yes, this is probably news, so news went the extra mile and went higher. That's what this is the level you're looking at. What about this? See, this is an important low. Price did not take it out. Price did not take it out. That's a good thing because it's kept for a later point of time. Okay, it's kept for a later point of time. So the point is, where's your take profit? Like this one. That's your take profit. After that, what are you going to do? The context has been set, right? Previous daily high taken out. We haven't really traded back into the daily range of the previous week. Low, low, low. We break up. Nice displacement up. Inducement. There's your buy. Okay, this is your buy. Where are you going to buy this to? Okay, where will you be buying this to? Weekly chart. Here, this high. Why? We need to take this out to get into this, right? So that's why. That's the logical part. But now here's another question that you might ask. How the hell do you know whether this is going to happen on this day itself? That's how that's why you look at the economic calendar. Red news event, okay. It has to do something, reprice somewhere, it has to reprice aggressively. You have to make sure that you're correct now in terms of your bias. If you're correct about order flow, if you're correct about structure, if you're correct about context, your logic, everything, this is an easy trade. But not something I would have taken because I'm not interested in big trades like this. Okay. So that's something therefore using all this information. All happy? Is everyone okay with it? Until you guys respond, I want to check Bitcoin because I'm not happy with I'm not happy with Bitcoin, bro. Come on, take money away from me, man. What about the rest? Are you okay? Tell me, you're good or what? Yes. All right, I'm open to questions because I'm pretty much done. Till then, let's look at this fellow. Okay, so this fellow, we're not gonna be doing anything until yeah, until here. But there's no imbalance also there. So let's see if there's SMT over here now. Buy this shit all the way up here to 39,100. From 39,100, I'll be entertaining sells. Let's see. I'll wait for that time. And I don't know why I kept it. Okay, I don't know why So that's fair value gap over here. Is there forms of accumulation? That is the problem. That is the question. Oh, wrong one. Sorry. Low, high, low, still nothing. Still useless. Apart from this one. Here, low, high, low, 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 low. We break. Accumulation zone is where? Where's the stop hunt? Stop hunt is here. Range that got manipulated twice is on the 1 minute chart. I need to see the SMT. Okay, stop hunt is here. Here is a range. Which fellow got touched twice? This fellow. Let's see. I did this course. I was lacking. Okay, now you know. Now you know. So I'm looking at this. For 100% sure, look at the way this is moving. Actually, no, look at the way it's moving here. See, this is the problem between Paperstone and Coinbase. Coinbase is more accurate, right? So I'll just go with what Coinbase is saying. Coinbase is saying we need to look at this imbalance, fair value gap, and imbalance. So let's see. All right, so does anyone have any questions? And also give me 1 second. I think someone asked me a question on Telegram. Someone new, maybe he's not here. This call, but give me a second. Or is it? I don't know. If you're here, let me know. Give me a second. If you guys have any questions, ask me. Right. So. Okay, you mentioned something about talking about model. Oh yes, I mentioned that briefly yesterday. I said I'll talk about it today. Okay. Right, so yesterday, to continue from yesterday, I was saying we are looking at swing number 1, swing number 2, and swing number 3, right? So this is the manipulation side of things, right? How everything is being manipulated. You're gonna get stopped out the most over here. This is the point in which, for example, something like this. That's going to give you that nice displacement lower, or in this case higher. Okay. So what do I mean by that? I mean the first swing in a bearish from a bearish swing high perspective. Obviously, swing high is bearish. From a swing high perspective, the first bar is going to be the manipulation of price. This one will get taken out. That one will get taken out. Boom, boom. Right? Then in the second swing, which is this here, right? That is the one in which you're going to be, looking for price to take out liquidity, price to go into a fair value gap, price to go to an imbalance, price to go to an order block, all that good stuff. Okay, here's an example. You have an order block here. Price does this, doesn't touch it. So that's the first swing. Second swing touches it. Third swing, boom. That's your move. Right? So the second bar is your confirmation of, okay, what did it go to that imbalance? Did it do that? Is it giving me SMT? Is it giving me a nice displacement down? Those are the questions you should ask yourself during that second swing point. Like for example here, okay, Here is the manipulation. So here's the manipulation. Here's also the manipulation in terms of Pepperstone. This is the second swing. Let's say it gave me what I want. Now what am I focusing on? I'm focusing on the third swing. Where's the third swing? Where I'm expecting the third swing to print inside of this one. So where would I buy? Here. Okay. So the third swing, which is this one, that is where you want to be selling from or buying from. This is where you enter, use your range valuation, use your fair value gap entries, imbalance entries, order block entries, all of that, right? So you have to segregate it accordingly. You need to know when will the first bar be printed, how will the first bar look on the lower time frame. Obviously, it's going to be small bodied candles like like this, like this, like this, consolidation type. What will the second bar look like on the lower time? It's going to be quick moves, and then a reversal, right? It's going to be a quick move. So one, this is a manipulation. Then the second swing is going to be quick displacement. Third swing is going to be fair value gap, stop punted, order block here, fair value gap over here, 50% of the range, 75% of the range, all that. Then what's the next? What's the next step? The next step is 1, 2, 3, and then displace. Then this resulting distribution of orders, that is your take profit plan. Where am I going to take profit at? Am I going to take it a set RR away, set number of pips away? Am I going to be looking at liquidity? Am I going to be getting off at areas in which I would, buy back from? It's a sell to buy, for example. I'm going to sell from up here. I'm going to buy it back down here, ride it higher. Okay. So those are the questions you should ask yourself. Always based on the 1, 2, 3, first swing high, 1, 2, 3, first swing low. First bar is always manipulation. Second bar is the one that does the manipulation, leading to the third bar, which is the real move. Okay. Then to confirm the direction, SMT here, SMT here, or SMT here, SMT there, displacement here, displacement there. Okay, this is how you tie it all in together, and it's I listed it down in the previous video, yesterday's session. So yeah, that's pretty much it. Anyone have any questions? I'm sure you all should have any questions. If not, then we may be gone, I guess. Let me know. I really want to see it come down here so I can buy it and go back up there. Yeah. Let's see if it is in the cards for wow. All right, so no question. Can I go? Can I go have dinner? I'm gonna stop recording by the way. So